Hello, welcome to this video by Indicator Vault. And in today's video, I'm going to go over a type of price action pattern and one that can be used when using divergence to trade with. And so, I've got here Divergence Dashboard, the multi-time frame one pulled up here. And of course, we do have the divergence solution indicator as well. But for this one, I just want to use the dashboard because it's a very easy to see, easy to read indicator, and it spots, in this instance, the bearish divergence, draws out the zone, with this high relative to this high, you know, with just normal divergence playing out. Of course, we do have this big drop down after it finds it, but the concept I wanted to explain is what is a real high or real low. And so divergence, we know, of course, you can have, whatever oscillator you have here on the bottom. I don't have one on because I don't need it with this indicator. Um, where price is going to make a higher high, but the oscillator will not. It will make a lower high, indicating there's a crack in correlation between the two. So many times when we see a high like this with divergence, this is just going to be a stop run, a stop hunt. It's wanting to take any orders, maybe breakout traders or stop losses up here before it actually shows its real move and moving down. So if we can take this as manipulation, which it is in this case, if you can, have a good eye for price action and start to learn where to spot manipulation, well, then this is actually more of the real high when it comes to proper order flow. So taking that into account, this zone here, marked by these yellow lines, these last two up candles, and we see it does break below. We do have the break of structure, right? This low got taken out here, starting from this move here. And then we got the manipulation up. Essentially, we're ignoring this price action when it comes to order flow. But obviously the indicator is telling us this, this is divergence. And then knowing divergence oftentimes is picking up on manipulation. We then can wait for price to get back in sync with proper order flow. So what does it do? It then breaks below the proper supply zone, wicks right back into it, and drops. So with this, on your chart, you can oftentimes, find and look for what is the real supply zone that is in play. What is the real order flow? If the divergence dashboard is helping me find that this is manipulation, where is the actual supply or demand zone that is in control and in play? And it just needs to get back in sync with it. So this is a great example here. You typically want to wait for a price then to close below the zone and then come back into it. And of course, this is perfect because right as this candle closes, we have that, and the divergence dashboard is coming into play. And you can also, put on other indicators such as the price action origin. In this example, of course, we have all these, sell patterns forming here. But I mean, great confirmation, double bar sell happening inside of the divergence zone, not to mention the wick up, the retracement back into the zone as the vertical bar sell before such a strong move down. This is the 1 hour chart. We can see here, this can be helpful sometimes because this supply zone it doesn't really get to it. And of course, this supply zone isn't fully validated until this low is broken. Of course, you can research that on your own, but using this concepts, and this is a little bit more of an advanced concept, obviously, but these are just other points of interest where you can look to trade. Now, for instance, if this candle was, maybe opened up like right here, a little bit lower, and so the open of the candle overlapped with, this zone, that would just be extra confirmation to get in on this zone. Of course, in this example, we just have the one, but nevertheless, it still works out in this example here, along with these confirmations as well. And then another great one is a logic day trading. Gives you the sell signal right after it wicks into here. But again, the divergence is also inside of the sell zone as well. All right, now in this example, kind of the same thing. Going to go over the Euro Australian dollar 4-hour chart, and very much similar example, right? Now, we do get the pin bar sell here, and we do get a drop, but just going off of this alone is not quite the confirmations we want to look for. We never typically want to trust the first high that is made. After this huge run up, we know price was probably going to want to consolidate, and so we never trust the first high. We're sitting on our hands and waiting. So then we see a move up, and then right here we see big strong move down, and after that candle, the divergence dashboard has now picked up that bearish divergence. So you're taking that same logic, that same concept, we want to look for the actual supply zone. And even though we didn't trust this one in the beginning, this had a strong move down. We're expecting it to get run. We're not necessarily expecting divergence to play out quite yet. We're just sitting on our hands and waiting. But now, as divergence has been found by the dashboard, we now have more insight into seeing that this is manipulation, that this actually is now the supply zone that is going to be in control. So we wait for this to get broken. We see it get here. We also see this low get broken. So great confirmation lining up inside of the zone of this candle. You can see I've got it marked out by the yellow lines. Now, this is a more ideal situation here. Inside of the divergence zone that it's drawn out, we actually have supply candles that are lining up with this zone as well. So as far as where price touches, so we can mark out this one. This is the candle responsible for this push down, this supply zone. So we can see it does wick above here, but see how price never closes above it. Of course, we got a fractal here, swing high fractal. The 3 candles closes, one last wick into it, and we can see the vertical bar sell. You could have easily either started, if you didn't get in here, which this is, this is the 4-hour, you can easily refine to 1 hour, 15, 5-minute. And I can guarantee you there are great entries here to take this all the way down. But as we play it out some more, look at the sensitivity to that candle right there. Another break of structure, another strong move lower, taking out this low right here, and then retraces right back into the bottom of the zone. And with this example, if I put on a fib from the high to this low, the current range, look at that, the 70.5 never gets closed above. So even if you didn't necessarily catch here, it retesting the zone, it retesting the zone and then closing below the 70.5 is your indication to sell, to get into the down move, that there is more bearishness coming. And of course, we see that play out in this example. Finally taking out this low. The low here that caused all this run up has now been taken out. So again, just to go over briefly, if let me get the replay tool back here to bring up the divergence. Again, this is just helping us filter out what are basically the real highs and real lows. So bearish divergence, again, not always, but many times when divergence is spotted, it goes hand in hand with manipulation. So it is just running these highs, running whatever stops, whatever people thought that this was the high, it's taking them out, breaks below the real supply zone, comes back in, retests it, also reaching into this supply candle as well, and then doing what we were expecting. And of course, things like the price action origin, I had the logic day trading on earlier. Other indicator vault indicators are great confluences. We also have the candlestick pattern pro that is great for marking out similar things like this, and just other confirmations here along the way until it gets taken out here. So anyway, that was just a little price action concept that I hope was helpful. And until next time, best of luck trading.